Okay, hello and welcome to this trader setup that we're going to be going through on the price ladder. In this part of the price ladder course, we're going through specifically on fading setups or contrarian type setups. And what we're going to go through now is actually one of my favorite setups by far. Um, and the reason being is that you can define your risk very, very well. So it's probably a very well-known setup to most of you. I think on the price ladder, though, if you can define what you're looking for, there is very many good opportunities. Um, and when the price action is just right, you can really push your probabilities in your favor with a great risk reward profile. So we're looking at um, false breakouts. So false breakouts. Slash, you could call them head fakes. So fake out one way and then go the other. Now, what we're looking for specifically on these types of trades is when a market, for example, is moving up or down to a level. Let's just say it's moving down to a level, as we're going to show in the example. So a market's, let's say, moving down to a level, and the level we'll just draw here. So we've got this level here. And the market's somewhat coming down to this level, and it breaks it, and then comes back above it, holds, and then continues to rally higher. Now, the premise of this obviously is people that trade for the breakout, expecting for this to continue to the downside. However, when we don't get that kind of volume coming into the market and the market reverses back above the level what we saw before, retests it and holds, you get the sellers that were coming in below the level having to cover. So it's a very good trade setup to keep in mind. So let's just see what the price action is like on this specific setup that we're going to be looking at in the Bund futures. And then we'll go through some of the trade parameters and what to look for in this trade in general. So let's just play this for you guys here. Okay, so as you can see, we're trading 156.60s. The key level that we're looking at is actually just below the low of the day at 156.54. So what we're actually looking at is at 156, and there we go again. Seems this happens way too often. 156.54 is our key level. And that's what we want to be looking at now, price action wise. So we can see the market somewhat coming towards this level now. We've got some sellers coming into the market, holding it offer at 57s, bid back at 57s, but this seems as if the market's trying now with some bigger offers coming into the market, traded down at 56s. Now we've just seen a big blip, not a big blip, but a blip through these 54s. Now we want to see what the price action is like through here. We've got a big offer coming through here. He's kind of vanished and gone bid on 98 lots. So there's a 400 lot there, and it managed to go bid on 98 lots. So that's not a very good sign for the sellers. If he was real and he was genuine, he would have stayed there and held his ground. Now we're seeing some price action here at 53s. The market's somewhat trying to make a new low here, but we're not really having any oomph in the selling. There's no extra volume coming into the market. We just saw a quick flurry through these 55s. We've traded 51s. Now, someone just bought 128 lots of market there. Now, the 12 lots, now we're back above these 54s here. So for the sellers, this is not looking particularly good because there you go. We've got 125 lots just hit into the bid, and it's reloaded at 55. So we're seeing absorption at 55s here, just above our key level at 54s. We saw absorption. And we've talked about absorption. It's obviously when a buyer or seller comes in and absorbs the price in front of it. So we're going to try and buy these 55s here, see if we can get filled. We just got filled at those 55s. And our risk, now the beautiful thing about this trade, this is what the greatest thing about this trade and why I love it so much. Because in this case scenario, well, what's our risk? Well, our risk is very, very simply below the low. We're long at 55s now. Our risk is very clearly defined. I know that if it trades 50s, I'm wrong. So I've got 5 ticks of risk. And I'm looking potentially for this to trade back into the range. You can see the high of the day is at 156.94s. I'm not looking for something that big, but we're looking somewhere in the midpoint of that. So we could be looking for something in the range of 15 to 20 ticks higher, but we'll probably scale out on the way higher. So this is the risk reward profile that we have in this trade now. The market's now trading 54s. 3 lots have gone traded into 54s there. We're not really seeing any actual selling as we're offered here at 55. This is a good sign for us. We're only getting 1 or 2 lots. If this were not to work and there was some true selling in the market, there you go. Notice how the big difference is, and this is where your price action skills come into play, understanding what's trading on the last traded. So we're seeing so if we had to break this up into the buyers, the aggressive buyers and aggressive sellers, so an A, B, and AS. So the aggressive sellers are doing, let's say, 4 lots, 2 lots, 25 lots. We've seen 28 lots, if I remember correctly. On the buy side, the aggressive buyers are doing 50. They're doing 100. They're doing over 100 plus, really. So the clip sizes on the buy side are clearly higher than the clip size on the sell side. That means the buy side are more overall. If we had to analyze them, the buyers are more aggressive. So this is already our first sign that this might play out in our favor. You could see the clips going through here, 50, 60, 129 getting bought at market here. We want to see, there we go. That's what we want to see. At 56 now, we've seen a big bid come in at 56 of 580 lots, which is something, you do want to see in these kind of scenarios. So this has gone bid above there. Now we're 3 ticks above the level. We've got a decent sized bid. Okay, it's gone down a little bit now, but we want to see the buyers hold their ground above these 2 prices. So 54 is our level. 55s was the previous low. We want 55s to 57s now to hold. We want every time people sell into them, they hold their ground, hold their ground. So long as they're holding their ground, we've just gone lifted there. 100 contracts. We've just gone bid at 58s, gone bid 59s, and you can see the sellers are struggling now at this point in time. They're kind of not in belief, or disbelief rather, that this is actually going to potentially rally. So we're getting a bit of, the sellers are in denial at the minute. They don't actually believe that this is going to continue higher, and they're continuing to try and sell this out. We're seeing a bit of a battle. So, from a trade mentally, you've got to understand in this kind of area now, we're seeing a bit of a battle take place just above that key level. What we want to see is the buyers win that battle. Obviously, the sellers could potentially win the battle lower, but that would just take us, we'd have to take us below 54s. We'd see an offer below 54s, and then maybe our stop is in trouble at 50s. But as we stand right now, the buyers are still holding firm. We're bid 58s here. We want to see a little bit more aggression here. Once we see a little bit of momentum, the market's starting to auction off this area, that's where we could start getting a little bit more confident in this trade setup. So we're currently bid 59s. We're just going bid 59s here, which is the furthest on side we've been so far. We want to see it actually trade 60s and 61s here. And we're trading 59 still. 60s offered. We just traded a 1 lot into 60s, 2 lot, 3 lot. We want to see a big clip. We want to see big clips come through. We want to see aggression. Anyone that's caught, so all the caught sellers that, sold it in this region and just below this low have to cover. We're just seeing a little bit of sidestepping on the book here, 156.58. We don't know if this is real. It's not real because that just went offered on 3 lots, which is not a great sign, but on the same token, it could be a spoofer trying to put a little bit of pressure on these shorts to the upside. But we're noticing we're just kind of trading 58s, trading 58s here, 57s. 23 lots into the bid. Seem to have reloaded that so far. 10 lots into the bid. We're getting a little bit more size there on the offer. You could see was we're selling into the bids here, hitting the bids here, 57s. We're not really giving way. So long as we can hold our ground here, there we go. Now we're seeing a little bit more aggression. Potentially, these sellers are starting to realize, wait, this is not really looking really good in my favor. I might start having to get out of this trade. And you'll see the further we move to the upside, the aggression of the sellers reversing to a buy starts becoming a little bit more apparent. You can see we're doing a little bit more volume here. 100 lots just traded, just hit at market at 58s. Let's see if we can hold that bid. We just reloaded. That's a great sign for us. That's what we want to see here. We hit into 58s, 100 lots, went offered. So we went offered and then immediately reloaded. We want to see that kind of price action. So long as we're reloading these bids, that's a good sign that this could potentially start building into a setup. And now, if you realize it is taking a little bit of time, you do have to be very patient in these kind of setups because they don't happen straight away, but you still have to have the confidence that, our low of the day was 55s, and anyone that's sold has now got to cover. It's just a matter of them being in denial right now. And in denial of the fact that this is now 5 ticks, trading 5 ticks above the previous low. So if this were to go down and if this was actually a genuine sell, we would have seen a lot more aggression on the sell side, and we're not really seeing them hold their ground here. And this is what we want to see here. We're just getting bid 60s, going big 60s, and we've just gone bid 61s on 4 lots really. So it's almost as if the offers are kind of disappearing here, which is a bad sign, because if you're seeing that as a seller, if you're short, you're not seeing much liquidity, you're going to say, okay, wait, I need to actually start hitting market soon because there's not going to be much liquidity. And there you go. Someone just hit market and lifted 62s. We're probably going to see 63s go on very little size. So there we go. That's where they're starting to realize that they need to get out of this trade quickly. And we're seeing a little bit more aggression to the upside. The buyers start coming in a little bit more aggressively. Now we're 10 ticks off of that previous low. Our previous low, as you guys do very well remember, was at 55s. We had to move down, broke 55s pretty quickly, and we traded a little bit here. Then we got back above, reloaded. We rolled it at 50, between 55s and 57s here, and then eventually we started moving higher. And then we're now getting this move in here. So this goes to show that this trade setup does have its own character. You have to understand the character of your setup. So if you understand what to expect from a setup, then you know next time when it trades again, how you need to approach it, the patience you have to actually have during the trade, because this has taken quite a while. This has taken overall about 10 to 15 minutes. And if you're putting decent size on these trades that you really do believe in, you've got to be very patient. So let's just go through this because we're going to let this kind of carry out now. I'm not going to go through any of the price action because we're running a little bit over the time I wanted to take on this. So I'll actually just go through. I'll actually go through now. Just erase this here. So I'll just go through what we're looking for in terms of price action character, and the stages that this setup does go through. So, as we mentioned before, we've got ourselves our level. We'll just go through this one more time. Got ourselves our level. We've got the market trending towards it. Then we get the very quick flush up. The market exchanges a few contracts and then eventually gets back above the level. And then at this level, we start seeing absorption, a little bit of selling, but the people on the bid are actually holding the market up. And then eventually we start seeing a bit of a move up, sideways, kind of very slow. And then eventually we get this kind of move here. So what's happening in these stage scenarios, if we have to put some labels on here, this is, phase 1. This is phase 1 where we're getting the breakout. Phase 2 is in here. The first indication for the setup comes in here on the breakout. That's your first clues of the breakout. So in here, you want to start asking yourself in phase 2, strong selling? That's your question mark, sorry. So we've got strong selling. If not, then potentially once we get above here, they're gonna have to start covering. And then in this phase, this is probably this is the bulk of the setup. If you can understand the price action here, this is where, you know, you're making money or not. If you can understand the absorption in here, this is your absorption. Then we have this phase in here, separate phase altogether. This is where it requires a lot of patience. This is your phase 4, sellers in denial. Obviously, if it was the other way around, if we broke to the upside, you'd be buyers in denial. So your sellers are now in denial that their setup is not going to work. And this is where we get the acceleration in price action. In phase 5, we have sellers covering. And this, obviously, in terms of what we see on the price ladder, this is very, very important, obviously. The sellers in denial, once we start getting to pinch points where they feel like they can't take that risk anymore, that's where we get the acceleration. That's where we get the rest of the setup kind of playing out. So I've just paused that there. You can see the market stopped around this 67, 68, which we just traded 68s. But this does eventually trade out to around this area. If I'm not mistaken, it trades another 10 ticks higher, I believe. So from a trade perspective, if we just had to define, how to trade this, we know very well. So if we just had to define this trade strategy, just bear with me for 1 second. So from a trade strategy perspective, so we look for the break. Do we see the strong selling? Once we get back above, we're buying the previous low or, well, high, if this could be selling the previous low or high. Your risk, which is hugely important, is basically the low we just made. So your risk is current low / high if you were the other way around, if we false broke to the upside. And your target, obviously your target can be quite discretionary. But if we just had to point out in terms of what that would kind of look like on a profile, if we're looking at a profile day that looks something like this, let's just say like that. And then we had this distribution, and that was your false break in there. This right in here was your tail / false breakout. Your target, basically, your risk is below there. Your target is for this to basically rotate back into the middle of the range. So that's usually what your target is. So your risk is very well defined. You've got very little risk here. And then your reward is this whole chunk in here. Very well defined risk reward, high probability. If you can understand the price action, I would highly recommend, to do many of these drills. These are fantastic setups and one of my favorite. The best setups are not where everyone's on them. The best setups are when people are caught, traders are caught, and they have to get out. When they have to get out aggressively, you usually get a bit of momentum as well. So that's an example of a false break. Hopefully I can get a few more up. But I'd highly advise study these, understand them. They're very, very good setups. Thank you very much for listening, and stay tuned.